Welcome to another Mortgage Minute. Remember, we are live every Friday at 3 p.m., and if you missed any of last week's episodes, you can always check them back on our Facebook videos. So this week, I'm going to discuss the difference between an FHA and a USDA loan. So I will begin with a USDA loan. There is two kinds of USDA loans. There is a Rural Housing Guaranteed Loan Program and a Rural Housing Direct Loan Program. Today, I'm going to discuss mainly the Rural Housing Guaranteed Loan Program. But if you have questions about the direct loan, just send me a message and I can put you in touch with the right people to get it done. So, on the USDA Department of Agriculture loan, it is mainly used in rural areas. But luckily, if you live in the North Country, almost everywhere besides the city of Plattsburgh is eligible. Areas such as Morrisonville, Cadyville, Peru, Malone, Canton, Potsdam, even Cumberland Head are eligible for 100% USDA financing. In the comments section after the video, I'll leave a handy map that you can check out and see what areas are eligible in real time all over the U.S. It's really a great thing to use. So, another thing is, if you live downstate or in a major metropolitan area, you won't be able to buy a house in the city center. But in most cases, you could still buy a house within a reasonable commute. Another facet of a USDA loan is that it cannot be used on an income-producing property. For example, you can't buy a duplex or a triplex or something like an income-producing farm. That's a no-go with the USDA loan. The main pro of the USDA loan is that it's no money down and 100% financing. And what that means is you can finance 100% of the purchase price without putting money down. So if a house is worth $100,000, you can get a loan for $100,000. It will cover that whole cost for you. The only main con of a USDA loan is there's income limits. And income is a little bit more challenging to calculate than something like property eligibility. There's a lot more moving parts, and there's a few different factors that go into eligibility. But a good rule of thumb is if you're a family of 5 and make less than $101,000 a year, you're most likely eligible. Both USDA and FHA loans can use 6% seller concessions. Seller concessions basically help reduce your cash to close. In a later episode, I'll go into greater detail with those, and if you have some questions in the meantime, feel free to give the office a call or message the page. We'd love to help you out. Now, on to an FHA loan. FHA loans have no property eligibility requirements. And what I mean by that is you could buy a house in Times Square or any major city center. You can use them all over the U.S., and you can buy a duplex, a triplex, or even a fourplex. FHA loans are usually my go-to loan for first-time home buyers who are looking into getting into investment properties or someone who wants to buy in a major metropolitan area or even just the city of Plattsburgh. Another benefit in an FHA loan is you can purchase a double-wide or a modular home with only 3.5% down. So, with FHA loans, the down payment, they all require at least 3.5%. So what that means is if you bought a house for $100,000, you would have to put at least $3,500 down, or 96.5% of the purchase price. There is no income limits for an FHA loan, but there is a purchase price limit. For example, in the Bronx, the limit on a 4-unit is $1.2 million, while the Clinton County limit on a 4-unit is right around $500,000. For Clinton County, a single-family home limit is $275,000. I believe the numbers are the same for Clinton, Essex, and Franklin County, but I can double-check and post a link after the video to help you out with that. At the end of the day, it really depends on what your long-term financial goals are when purchasing a home. Don't stress out and don't try to figure out down to a T what loan program is going to be best for you, because really, the best loan program for you also depends on what house you pick. So the best thing to do, talk to a mortgage pro and let the pros see what loan program is best for you. You know, sometimes you could qualify for a USDA loan, but an FHA loan might be a better option for you. And who knows, you could go conventional too. So it depends a lot on the property. So don't stress out too much trying to figure out what loan program to get in before you even have the house picked out or you're pre-approved. If you're looking to purchase a home, you know, in 1 month, 6 months, even a year, give us a call at the office, 518-324-5544, or you can visit on Facebook at facebook.com/BOE Plattsburgh, And you can send our Instagram page a message too if you want to get in touch with us like that. We're always available for you, nights, weekends. We love creating homeowners, and I hope to see you in my office soon. So, this is Matthew Craig with another week's Mortgage Minute, and I hope to see you next weekend live Friday at 3 p.m.